I'm about to snap. All right, guys. In all seriousness, we have so much to discuss in today's video, so many stocks to talk about, so many things in the market going on. This is just ridiculous. Hope you guys enjoyed it as always. I don't even want to waste any time here. Let's just get straight into it, okay? Snapchat. You know, just when you think it can't get any worse. It can't get any worse. This is enough at this point in time, right? Stock is down 86% in the past 1 year going into their earnings, right? It can't possibly get any worse. The stock is down 20+% after hours. And I just looked right now. This is a little, when I first started prepping this video, I looked right now and the stock's actually in the sevens now at this point in time, right? And just for the stock going into this earnings, it's down almost 86%, right? Absolutely incredible for the stock to fall another 20+% here after hours. And it just goes to show you that there's, when it comes to these sorts of stocks, any stock, to be quite frank, there's no price low enough in this market. There's no price low enough. And just as when you're in a euphoria market, like we are obviously in at the very end of 2020 into the very beginning of 2021, right, where it was like you could throw out any price. In this market, it's the exact same thing. It's just on the downside at this point in time, and no one wants to buy anything. And, just awful, right? And this is leading to problems with other stocks, right? Meta's down 4+%, down 4.20% after hours for Meta. So Meta's going to likely lose, tens of billions of dollars of market cap tomorrow because Snap is down big, right? And the way Wall Street looks at it is they say, oh, if Snap's numbers aren't quite there, Meta's numbers aren't going to quite be there, right? This is going to cause Google to likely go down tomorrow and lose tens of billions of dollars of market cap as well for good old Google McDougal. And you might say, that's ridiculous. Like, Snap can't be compared to Meta. Snap can't be compared to Google McDougal. Hey, I don't make the rules of the stock market. It just is what it is, folks, okay? Let's dive in here. I want to show you a few numbers in regards to Snap, and we'll find out, are these numbers really that bad, right? So average daily active users, DAUs, came in up 19% year over year. So strong actual growth in Snap's product. I'm actually really impressed that Snap is still growing daily active users. It's a very competitive landscape out there, between obviously FB, between things like obviously Instagram and TikTok. It's not an easy environment. So the fact that Snap continues to grow daily active users, right? People that are coming on every single day, it's impressive. North America, the numbers were up 4%. Europe, they were up 11%. Rest of the world was up 34%. So to give Snap some respect, I think this is actually very, very impressive. Very, very impressive. Now, this is where you start to get into major trouble. Revenue by geography. Global was only up 6%, right? North America was up only 3%. Europe was up only 5%. Rest of the world was nice at 22%, right? But that's a very small segment of their business. Now, the more troubling thing that happened was they basically are kind of like very scared about numbers kind of moving forward and very scared about trying to even give any guidance for numbers moving forward. More troubling than that is average revenue per user, ARPU, which, if you know anything about social stocks, is one of the most important metrics, was down 11% on a global basis, down 1% North America, down 5% Europe, down 9% rest of the world. So that's not something you want to see your ARPU going up and up and up over time. I think part of this is because their revenue was probably weaker than they thought it was going to be, right? And their ads in terms of daily active users was probably stronger than they thought it was going to be, right? And so therefore, you get a recipe for ARPU being in a negative spot. So yeah, down double-digit percentage for ARPU, no bueno. Net income loss, they lost a ton of money, obviously. Adjusted EBITDA was heavily, heavily negative there. But I've got to stick up for them here, okay? A huge amount of that was stock-based compensation expense of well over $300 million for the quarter, which is obviously pretty much a non-cash expense for the company. So do keep that in mind in regards to Snap, which that's something that affects a lot of public companies, including even like a Palantir and things like that with stock-based compensation expense, okay? So that's going on as far as the numbers in regards to Snap. Now, the problem for Snap, and this is a big problem for Snap, right, is if you are a business, a company, whatever, right, and you are going to advertise, the places you're going to advertise is not Snap first, okay? You're always going to, I know so many people that run so many different businesses, right? You're always going to start with FB. It's always going to be your first place you want to advertise. It's always going to be the one that gets you the best bang for your buck, okay? After that, then it's about IG. Then after that, it's YouTube, okay? Then way after that, you start to consider things like Twitter, things like Snapchat, things like TikTok in terms of advertising, okay? And so do keep in mind things like Reddit as well, right? Do keep in mind, like, Snap is not the first place businesses and companies are going to go to advertise, okay? And so that does hurt them, right? Now, I think this is very important that I say this. I think it's very important. I want to take a moment to show you the most helpful stock market related service I've come across this year, and it's called Tendies. Tendies allows you to see unusual options activity going on in the market, including stocks you might be looking into or you might own. And with the pinned comment down there, you're going to get free access to everything I'm showing you here right now, okay? So something I always like to look at in the market is the top 5 biggest unusual options moves out there. So I'll use Tendies to see something like this, right? And, I've been talking a lot about Meta stock recently, right? Look at the top 5 moves. Now, what do we notice as far as unusual moves here? 4 of those top 5 biggest moves in relation to Meta here today, call options.
Tendies is a social trading app that's giving away hundreds of dollars worth of tools for free, saving you hundreds per month if you look at what other services charge for the same stuff. I personally love the options flow, which is unbelievably helpful at predicting price movements in the options market. I also want to show you Brokerage Connect, where you can integrate your portfolio so you can monitor your performance and do the necessary research to be profitable in this environment. All the due diligence in one place, and you have access to constantly refreshing feed of information relevant to you in your portfolio. So make sure you click the pinned comment down there to get free access to all of this I showed you in this video here today. That will be pinned comment.
Why is Snap our fearless leader of this market, right? I've seen this for like 3 or 4 quarters in a row now, where Snap is the first to report of tech companies, and this is like seen as the fearless leader. And I'm just like, do they deserve to get this sort of respect to throw stocks like Meta and Google McDougal and those stocks around, right? And potentially put the whole NASDAQ down tomorrow? Is Snap really our fearless leader in this market, right? And I just don't think that's right. I think maybe Snap should start reporting like later in the earnings season, because it's just ridiculous that is our first tech company that everybody looks at other than Netflix, right? And they're like, oh, what's Snap going to report here? And it's just like, come on. Snap, they haven't earned that spot, to be quite frank, okay? But I got to say, on a valuation basis, if this is trading in the 7s or 8s tomorrow, it's actually interesting. Will I buy it? No. Too many other stocks that are heavily discounted, including Meta. That's a much better risk-reward profile, in my opinion, than Snap over the next 3 to 5 years. But do I think Snap at $7 to $8 tomorrow is likely a pretty nice moneymaker over the next few years? Absolutely. So do keep that in mind, okay? Now, this is very reminiscent of what happened in the tech bubble, right? Because look at something like this, right? In the tech bubble, a ton of stocks declined 75% plus from their highs, wiping out $1.7 trillion of value at that point in time, right? By the end of the stock market downturn in 2002, stocks had lost $5 trillion in market capitalization. Yeah, we've lost some insane numbers, right? After suffering losses, retail investors transitioned their investment portfolios to more cautious positions. Popular internet forums that focus on high-tech stocks such as Silicon Investor, Yahoo Finance, and Motley Fool declined in use significantly. It's interesting, right? And this is pretty funny. This Aeron shares or whatever, Aeron shares, a symbol of opulence displayed by the tech or the .com companies, which retail for $1,100 each, were liquidated in mass. Okay, it definitely reminds you a lot of what's going on in the market right now in terms of the tech bubble, pop there. When you see stocks like a Snap, right, down 85+% going into the earnings, and then down another 20+% after hours, right? When you see something like that, it's very reminiscent of what we saw back in the tech bubble days. And when you talk about trillions of dollars just wiped out, right? And the interesting thing is retail transitioned their portfolios to more cautious positions, right? Well, that was interesting because, one, they probably missed out on a lot of good opportunities to be buyers when a lot of those tech stocks that did make it through were heavily discounted. The second part of that is, right, you positioned, let's say, index funds, and then what happened a few years later? Well, 2007 to 2009 came, and all the indexes went down 50% plus. So they got a, what's the proper word? I don't know if that's a proper word, okay? They got screwed. Let's just put it that way. They got screwed twice. They got screwed with the tech stocks. They positioned to more safe portfolios, and then a few years later, all the indexes go down 50%. And they're like, what the heck, man? Are you kidding me? Like, how does this happen, right? And meanwhile, you look at a stock like Amazon, for instance, right? Stocks that made it through, that continue to grow their businesses, like in Amazon, for instance, right? Those stocks actually moved up massively. From 2001 to '07, that stock went up almost 1,000%, right? So you could have gotten the stock anywhere along the road and been up hundreds of percent. Never mind if obviously you held for the long term, right? But if you just held during those few years and were a buyer, you likely made hundreds of percent in actually a pretty quick amount of time on Amazon stock, right? And we'll see this exact same phenomenon play out over the next few years where, the stocks that make it through and continue to grow their businesses, they'll see their stock prices appreciate 200%, 400%, 600%, 800%, 1,000% over the next few years. And, there's going to be several of those stocks out there, and there's going to be others that just don't make it, the pets.com, as they say, right? So that's something to do keep in mind there in regards to this whole situation, right? Whirlpool reported earnings after the bell. I'm amazed the stock's only down 4%, but it's not a super volatile stock, so do keep that in mind. The stock's already been hit heavily, but I'm surprised. I would have thought this stock would have been down to like 8 to 11% after hours based upon their troubling numbers. And this goes way bigger than just Whirlpool, and I'm going to explain why this is way bigger than Whirlpool, and this is devastating news to countless companies that, and some have held up well, and watch out for those, okay? So net sales were down almost 13%. Year over year. Net sales excluding currency were down almost 10% year over year. GAAP net earnings were down almost 70%. Oh boy, okay. Ongoing EBIT, not EBITDA, EBIT was down 56%. Ongoing earnings per diluted share was down 32%. Free cash flow was down literally $1 billion. What in the world? Holy smoke, is that ain't no dang joke, okay? Cash provided by operating activities there, down $984 million. So these numbers are awful. And the worst part for Whirlpool is it's likely going to get worse over the next few quarters. They're going to cut production big time, which obviously is just a very troubling sign for the housing market and for, honestly, the economy. Whirlpool is one of those companies that, if you want to understand how the economy is doing, I think Whirlpool's an important company to pay attention to. And this basically is spelling that no bueno, okay? We're in recession. No doubt, we're in recession, right? And, this is something that I was fearful of, back in January. I put out the video that I was preparing for a recession, something I was definitely scared about, and unfortunately it's happened. The market hasn't acknowledged it yet. Maybe after the midterms they'll start to acknowledge we're in recession. I don't know. We'll see. But the numbers are self-explanatory, man. The numbers don't lie. Now, in regards to this is going to have much bigger ramifications than just Whirlpool. All these housing-related stocks are all going to go down a lot more. Now, I'm not playing any short positions on these stocks or put options, although I probably should. And, I've been very negative on this group this entire year, and I should have spent all my money on put options and shorting these stocks instead of buying long in all my stocks, to be quite frank, because I would be up a whole lot of money right now and down a whole lot of money. But, hindsight's always perfect, right? So these stocks have more pain ahead, and that's for all of them. And so these Home Depot and Lowe's have been hit, but they haven't been hit nearly as hard as they're going to get hit. And, as housing slows more and more throughout 2023, you're going to see that negatively affect Lowe's numbers and Home Depot in a massive way. And those stocks are going much lower. A company like a Whirlpool reports these horrible numbers. Oh my gosh, okay. You think, everybody was buying all these appliances left and right, and Home Depot and Lowe's and Best Buy even were thriving because that those sales aren't going to be there anymore now at this point in time for at least the next 6 to 12 months, right? All these big ticket purchase items are in a big recession. Let's just call it that. Smaller ticket purchases like going out to dinner and things like that are holding up well, but the big ticket purchases where people are dropping $1,000+ or thousands of dollars, that's where you're going to have the real trouble in this economy, right? RH has a lot further to fall. All these ones do. Toll's probably going to go to 33, I would guess, a share, maybe 26 by the end of it. All those babies have a lot more to fall, and it's going to get worse before it gets better for all these stocks and for housing in general. Okay, Okay, good old Tesla Tesla. So Tesla was interesting today. Stock fell 6.6% roughly, right? It held the $200 level, which was intriguing. It fell to about 202. The long stepped in and obviously bought up the stock, and actually had a really nice rally at one point. People were thinking, oh my gosh, is this baby going to go negative? Or excuse me, not negative, positive on the trading day? Like, holy smoke, this ain't no jokers. And then the dollar started to rally, and everything pretty much fell, including obviously good old Tesla Tesla. In terms of Tesla, I thought the earnings were pretty respectable. Tesla's just going to have a bad sentiment for the next 6 months, if not 6 to 12 months. The sentiment's just going to be bad in Tesla. Wall Street's going to be talking about, people aren't going to be making big purchases. The market's at some point going to come to the realization that we're in recession, right? That's not going to be good for Tesla's sentiment around the stock. And so even if the company continues to put up good numbers, the sentiment around the stock, especially from the Wall Street side, which is the big money side, is still going to be very negative around the stock for the next bit of time here. And so do keep that in mind in regards to good old Tesla. I might be a buyer of Tesla in 2023, to be honest, and that'll be the first time I've been a buyer of Tesla in years, okay? Now, the Fed, obviously, raising rates like crazy. They've caused a lot of devastation. Has it necessarily made inflation go down? Not really. So their intended thing hasn't really happened, but what has happened is they've crashed wealth. There's been over $10 trillion of wealth that has been wiped out because the market has gone down so much, right? QQQ, which is basically the NASDAQ's down 33% year to date. $10 trillion plus of stock market wealth wiped out. That's just in the United States. That's not talking about international or what's been going on in China or Europe or any other markets. That's just the United States. $10 trillion plus just vanished, right? Including, hey, I'm at least a few million of that 10 trillion. Okay, I'm probably like $3 million of that 10 trillion is just me personally of wealth wiped out, right? Incredible number. The housing market's just started to fall. If you're talking about the next 10 trillion of wealth wiped out, you're looking at it, the real estate market, and going into this year, that was a market that was valued in the United States about 43 trillion. I wouldn't be surprised if by the summer it was valued somewhere getting close to 50 trillion. But yeah, if you're thinking about where's the next $1 trillion lost, it's right there, baby. Next $10 trillion plus of wealth wiped out will be from this guy right here, which is just not good for the confidence of individuals out there, to be quite frank, right? And a lot of people look at that and they're like, wait, housing prices are going to go down. That's great. Well, at the same time, if maybe banks aren't lending or mortgage rates are insanely expensive at 7+%, that's not an ideal situation, right? Or people aren't making as much money from there's jobs or something like that. Like, there's many various factors that go into that might not be the ideal situation for housing to be down. What if you lose your job, right? You might have a good job, it makes $100K a year, and you're like, I can't wait till these housing prices go down. And then you lose your job, and let's say you have trouble finding another job out there. Well, then you're not in a position to go buy that house that's maybe very discounted at that point in time, right? So sometimes I don't think people think about like the negative consequences that all these things kind of play in part, right? Now, in terms of the crypto market, which is a baby compared to obviously the real estate market and the stock market, that's lost over $2 trillion of wealth has been wiped out in obviously the crypto market. So the Fed's done a great job wiping out wealth of basically Americans and people worldwide, and even a bigger basis. Look at the Whirlpool numbers; they were horrible international. So they've done a really great job of that. I just don't know if they've really brought down the price of inflation in general, right? I don't know if they brought down the price of a gallon of milk, which no one should be buying a gallon of milk. You need to be buying a gallon of Oatly, okay? Oatly, they need as much help as they can get, okay? I need as much help as you go buy Oatly, okay? Drink oat milk, forget the cow milk stuff, okay? So next subject I want to speak about here is the fact that there's countless stocks that have gone way lower than I ever anticipated. And, to show you kind of and illustrate this, right? Palantir never saw that getting down to the sevens where it's been at recently. Coursera never saw it getting down there. PayPal never saw that getting under 100. Oatly never saw that going to 2. Meta never saw that going on, 130. It's going to be in the 120s tomorrow. Never saw that. The Chef at 420, never saw that. Honest at $3, never saw that. Fubo at $3, never saw that. Planet at $1, never saw that, okay? Never saw that coming, right? But when you're in this sort of market, it doesn't matter what you saw coming or what your bear thesis was or whatever, right? It's going to eclipse everything that you thought possible, right? That's this sort of market. And I watched a great, interview or piece of the interview inside the private stock group last night, which was from Peter Lynch. And he's been through, obviously an awful market before. And he was talking about Taco Bell, which was one of his investments, going from $14 to $1. Taco Bell. Now, obviously, Taco Bell wasn't as respected back then. I'm pretty sure this was back in the 70s, right? Either 70s or 80s. But $14 to $1, right? He was talking about this Kaiser aluminum company he was invested in. Went from 29 to 4. And he was loading the boat at like 15 and some change a share. And then it went to 10. And he's like, it can't go any lower, right? And then it went to 9. And it went to 8 and 7, 6, 5. Next thing you know, it was $4 a share, right? And so when you're in one of these vicious markets, the expression of, how much worse can it get? It can't get any worse. This must be the bottom, right? It's just a very dangerous game to play in this sort of market. It can always get worse. And that's what we're finding out. It's a freak market. You very rarely get these sorts of markets. Normally, you can say that. It can't get much worse than that because usually it's true with a lot of stocks in most markets, right? It's not one of those. It doesn't care about valuation. It doesn't care. It doesn't matter. You could be trading at a 1P ratio, and it doesn't mean it's not going to trade down to a 0.5P ratio. It doesn't matter. Valuation doesn't matter any longer in this market. It didn't matter on the upside. Now it no longer matters on the downside. It doesn't matter the price to sales ratio. It's just like the sentiment, and it's just overall negative, and it doesn't matter. Like Meta's trading at a 10P ratio. That's stupid. This stock should be trading at least double or triple that. But it doesn't matter in this sort of market. The market's just like Meta, Snap's bad, sell Meta. Sell Meta. That's just the way it is. And we can cry about it. We can complain about it. We can understand that's the market we're in. It's in a very dumb place, to be quite frank. And, eventually it will snap back to reality. But right now it is not in reality. It's in its own fairy tale land of this, right? And in late 2020 and into early 2021, it was in fairy tale land about, the upside, right? And stocks could go to any valuation. Now we're experiencing the same exact thing. It's just on the downside now at this point in time. And it won't last forever, I can tell you that much. It'll be over sooner rather than later, just as that whole bubble situation lasted a bit. And a lot of folks were like, is this ever going to pop? Like, what's going on here? And eventually it popped, right? And we've seen that play out, right? Look at this here. Every bond is now over 4%. Interest on the $31 trillion in debt is rising and approaching $1 trillion. Well, where will the government get their money if they don't raise taxes? That's funny. Oh, gosh, okay. Wonder where, man. Gosh. So, in all seriousness, the Treasury market's obviously taking money away from the stock market right now, and a lot of people are looking at that as a place to park money. And you've looked at a lot of stocks. I don't know how many of you guys keep track of like stocks like Verizon, stocks like AT&T. Those stocks are down over the past number of years. Like you pull up a 5-year chart of those stocks, they're down heavily. Even I think a 10-year chart, those stocks are down heavily. And especially in the past year, in 6 months, those stocks have been hit very, very hard. And you might say, those are supposed to be the safest companies, right? Like, why are those stocks selling off? Well, the way people look at a lot of those stocks is, I want to park money there to collect the dividends, right? Because those are big dividend payers. But with treasuries pumping the way they have moved, right? A lot of people look at that and they say, why do I need to be in Verizon stock or AT&T and risk my money? Why don't I just go ahead and buy a treasury? That's the way the market looks at it. I'm not going to say that's right or wrong. That's just the way a lot of investors look at it, right? And so that's why you've seen weakness, even in stocks like Verizon and AT&T. I'll pull it up for you guys. And, Verizon is a stock I've always, been intrigued with on the dividend side, right? And maybe at some point in time, I get in that stock. But you got to look at this, baby. This is supposed to be one of the safest stocks in the market, right? And it's basically down 30% year to date. If you pull up a 5-year on Verizon, you're down 25%, right? And so you collected a bunch of dividends over the past 5 years, so hopefully that offsets some of that. But that's pretty interesting, right? Let's see, are you up anywhere from here? 2013, you're still down. So you got to pretty much, if you invest in the stock, geez, even back in 2011, so Verizon stock price hasn't done anything in over a decade. That's incredible to think about, right? And I'd assume AT&T is around the same. That's just nuts, man. Absolutely nuts. But you've made a lot of good dividend money, so at least there's that component of that, right? Oh my goodness. But that's important. It's stealing money, right? Now, we have some good things going for us, right? The cost of shipping freight containers across the Pacific Ocean has cooled from record highs hit during the Rona, when demand for goods manufactured in Asia outstripped supply. Don't be surprised if those freight containers get even cheaper over the next 6 months, and that's great news. If you own a company that has been destroyed because they have to ship product overseas, it's going to be a lot better. Okay, at its peak in mid-September of 2021, the average rate to secure a container on a ship from Asia to the United States West Coast reached $20,586, a 15-fold increase from early January 2020. It's ridiculous. By contrast, the average price for a freight container Friday was $2,720. That's still very elevated. That number is going to come down more. We're going to eventually get under 2K, which is where we should be. But this is great. Like I said, this is wrecked. A company like I own that comes to mind, Corsair Gaming. Corsair Gaming obviously has to ship product from Asia over to the United States, which is their main market, right? As well as to Europe as well. They got wrecked. Their margins got absolutely wrecked for the past year because of the freight containers. It's ridiculous. Just to ship products, insane, right? Now it's going off. So what do you think Corsair's margins are going to do in 2023? If I had to guess, I believe Corsair margins are going to go up considerably in 2023. Just my thought process there, right? And remember, they've gone up on price because they had all these things going on, right? Including freight costs. They've gone up on price in a lot of their products. Do you think they're going to magically move those prices down now? Probably not. And so, their margins are going to likely improve dramatically in 2023. That's just something to keep in mind. And there's a lot of companies out there that fit this criteria in a way, right? Now, if you look at the used car vehicle index, oh boy, that baby's been sinking. And so that's obviously good news as well. Car prices went to a bubble territory. It was ridiculous. I mean, you shouldn't be able to buy a car, drive it for a year or two, and then make a profit off of it. That's never happened before. It's absolutely ridiculous. But that did happen. It did happen, man. And that went on, and eventually that bubble's got to pop, right? So what you're seeing play out in front of you right now is the popping of everything. Stock market, real estate, crypto, used car prices, right? Container costs, everything like that. You're seeing it go, all these ridiculous prices. And for some companies, it means bad news, right? For a company like a Whirlpool, it's bad news. But for other companies like Corsair Gaming, this is actually good. And for smaller items, they're still going to sell strong. I think Corsair's revenue is going up in 2023, to be quite frank. I think gaming is going to have a strong year, and I don't think, for most of their products, they're under $200. They're not the ones that are going to feel the real wrath of this market. The RHs are going to feel the real wrath of this market. The Whirlpools, the Home Depots, the Lowe's, those sorts of companies will really feel it bad in 2023. And so you have a divergence of companies that essentially their margins are getting much better and their businesses are trending in the right way, while you're going to have other companies trending in the wrong way. And this is the way it plays out. And, you look at this year, right? You've had certain companies that their numbers look great, right? And it looks like nothing wrong. And other companies that have been absolutely wrecked. And so this is how one of these cycles plays out. And unfortunately, for some of the bigger companies out there, they're going to be some of the ones that are kind of feel a little more of the pain in the market over let's call it the next 6 to 12 months, versus there's going to be other stocks that are absolutely thriving and their businesses are getting in a much, much better spot. The only question will be, do their stock prices get reflected in that short amount of time or not? I think that's the only question out there, guys. So anyways, much love as always. I appreciate everybody for joining me as always. And make sure you check out Tendies. That will be the pinned comment down there. Create an account with them and start tracking any stocks that you own on there and see if there's any unusual options activity. Very, very intriguing year, obviously, in the markets. Much love as always, and have a great day.